When preparing the operating activities section of the statement of cash flows, there are two methods that we can use, the direct method or the indirect method. Both methods arrive at the same amount for net cash provided by operating activities. In this instance, it's $172,000. They differ in how they arrive at the amount. The indirect method adjusts net income, for items that do not affect cash. Most companies use this method, and this is the method that we're going to focus on in this learning objective. Operating activities include the cash effects of transactions that create revenues and expenses that are reported on the income statement. Our focus is to determine the amount of cash provided or used by operating activities using the indirect method. To determine this amount, we must convert net income from an accrual basis to a cash basis. You'll need to analyze the current year income statement as well as a comparative balance sheet. More specifically, you want to focus on non-cash current assets and current liabilities, such as accounts receivable, inventory, accounts payable, and wages payable. To explain how to prepare a statement of cash flows using the indirect method, we will use financial information from Computer Services Company. So as I just stated, we need an income statement, and more specifically, some of the items that we're looking for is depreciation expense. We have $9,000. We also have a loss on disposal of $3,000, and net income is $145,000. So there are specific items on the income statement that we will need to help us convert that income that's on the accrual basis to a cash basis. We've already analyzed computer services, and we determined that the change in accounts receivable, inventory, and prepaid expenses are considered operating activities. We also determined that the change in accounts payable and income tax payable are also an operating activity. To determine net cash provided by operating activities under the indirect method, companies adjust net income. Before we talk about the three adjustments, I'd like to discuss why net income must be converted to net cash provided by operating activities. Under GAAP, most companies use the accrual basis of accounting. This requires a company to record revenue when it is earned and expenses when incurred, regardless of the timing of cash receipts and cash disbursements. Revenues include credit sales for which the company has not yet collected cash, and expenses incurred include some items that have not yet been paid. Under the accrual basis of accounting, net income is not the same as net cash provided by operating activities. The indirect method starts with net income and converts it to cash flows from operating activities by making three types of adjustments. The first adjustment is we're going to add back non-cash expenses such as depreciation and amortization. We're going to subtract gains and add losses. And lastly, we're going to analyze the changes in non-cash current assets and current liabilities such as accounts receivable and accounts payable. These adjustments are actually included in the handout for this chapter, and we're actually going to discuss each of these in detail in the next few slides. We need to adjust net income for non-cash expenses such as depreciation. Recording depreciation expense does not affect the cash account. It actually affects a non-current investing asset, such as property, plant, and equipment. Again, if you want to think back to financial accounting and the journal entry for depreciation expense, you debited depreciation expense and credited accumulated depreciation. Again, there was no impact on our cash account. Since depreciation is subtracted from net income, we always add it back to convert net income to cash flow from operating activities. Remember, depreciation is simply the process of allocating the cost of a building or piece of equipment over their productive lives using a systematic and rational method. Computer Services reported depreciation expense of $6,000 for building and $3,000 for equipment, so they will need to add back $9,000. And again, they're going to add that to the net income of $145,000. All right, the next adjustment is we need to add losses and subtract gains on the disposal of plant assets. If a company sold property, plant, and equipment at a gain or loss, the amount of cash received would be classified as an investing cash inflow. Since all of the cash received is an investing cash flow, an adjustment must be made in the operating activities section to avoid double counting the gain or loss. Losses on sale of property, plant, and equipment are added, and gains on such sales are subtracted to convert net income to cash flow from operating activities. We know the company sold equipment with a book value of $7,000. Again, the cost was $8,000 and the accumulated depreciation was $1,000. And we sold it for $4,000 cash, so they had a loss of $3,000. So we need to add back the loss on disposal of plant assets. The last step to reconcile net income to net cash provided by operating activities involves examining all changes in non-cash current assets, except for cash and short-term investments, as well as current liabilities accounts, except for any monies that are owed to financial institution. The accrual accounting process records revenue when earned and expenses in the period incurred. We need to adjust net income for these accruals and prepayments to arrive at the net cash provided by operating activities. We can apply the following general rules. Add the change when an operating asset decreases or an operating liability increases, and subtract the change when an operating asset increases or an operating liability decreases. This table summarizes how to adjust net income for changes in both current assets and current liabilities. It has been included in your handout, and I would highly recommend that you keep this handy when you are preparing your statement of cash flows. All right, so we know that our accounts receivable decreased, which means we're going to add $10,000. Our inventory increased, so we're going to subtract $5,000. Our prepaid expenses increased, so you'll subtract that, whereas our accounts payable increased, so you're going to add that back to net income. And lastly, our income tax payable decreased, so you're going to subtract that from income. Again, if you add all these adjustments, you will arrive at the net cash provided by operating activities of $172,000. This slide is a great resource that summarizes the three adjustments that we just discussed. The statement of cash flows prepared by the indirect method starts with net income, and then items which are noted in this slide are either added or subtracted to arrive at the net cash provided by operating activities. I have one last comment that I want to make on the change that occurs in assets and liabilities. And again, this is to help you remember the adjustment. And if it doesn't help, then just go back to this table and essentially memorize this. But what I want you to think of is the accounting equation must remain in balance. So assets must equal liabilities plus our stockholders' equity. If a company receives cash from a customer, that means our cash is going to increase. If our accounting equation is going to remain in balance, then our receivables has to decrease. So again, the assets are going to have an opposite effect on cash, meaning if cash goes up, assets will go down. That's why when you see those changes, an increase in a current asset means we're actually going to deduct or subtract that from net income. The reverse is true. If there's a decrease in our current assets, we're actually going to add or increase net income. Liabilities, however, have the same effect or going to move in the same direction. In other words, if a liability decreases because we paid a supplier, then you're going to see your cash go down as well as your liabilities. And you can see that when it comes to those changes, we're moving in the same direction. In other words, if a liability increases, we're also going to increase net income or add it to net income, whereas if a liability decreases, we're going to decrease net income or deduct that amount from net income. In this exercise, you are going to focus on the net cash provided by operating activities section only. The solutions to this exercise will be provided in the next video.